You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast coming to you from Montecito, California. Before we begin, I want to remind you there is a group called the Accredited Investor Club that is associated with wealthformula.com that if you are interested and if you meet the criteria as an accredited investor, which means you make $200,000 a year, have been doing so for a couple of years, 2 years, with a reasonable expectation of doing so in the future, or $300,000 if you are filing jointly, and or you have $1 million of net worth outside your personal residence, you are an accredited investor and you can be part of our club. So go to wealthformula.com and sign up for the Accredited Investor Club and get onboarded. We just had a great opportunity come through. There's a lot of distress in this market, opportunities to take advantage of it. So don't sit on the sidelines. Join us. Let's talk today about an incredibly sexy topic, which is liability insurance. Okay, so not necessarily super sexy, but it is a necessary evil. It is something you got to have. It is asset protection 101. In other words, even before you get to, LLCs and even before you get to, fancy trust and stuff, you got to make sure that you got some insurance. And it's not just about you, it's about the people around you. It's not just about car insurance for yourself, but car insurance for your kids, those rowdy teenagers, because that's all liability is on you, right? Property insurance, same thing. Not sexy stuff, not at all. But we know it's important. Those people in the Southeast and all that getting hit by these crazy storms. And they're glad they have insurance. Property insurance is important. Medical malpractice insurance, you doctors out there, you know how important that is. Anyway, all that kind of stuff. And again, it doesn't sound exciting, but let me ask you this. Do you know the 5 different parts of an insurance policy? And okay, so maybe you don't. But should you? Yeah, you should. And you should know which ones to look for, because there's some parts of those policies are more likely than others to try to screw you over. So you want to make sure you understand that. You know where to look for that kind of stuff. So today we are going to have liability insurance 101 conversation with a woman who loves liability insurance. So here's my suggestion. Grab a property insurance policy, some kind of insurance policy that you have already. Follow along. She's going to go over those 5 sections. And we're going to talk a little bit more about various types of, how to pick out insurance, how to know if it's a good company and all that kind of stuff. Again, not super exciting, but this is nuts and bolts personal finance. And that's what I'm here for. And more, of course, but nuts and bolts are important. We will have this conversation right after these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Chantel Roberts. She's a self-described insurance nerd who's dedicated to providing trustworthy, valuable assistance to give you a clear understanding of claims, standards, and practices based on her 25 years as a multi-line adjuster. She's the author of Once Upon a Claim, Fairy Tales to Protect Your Assets, and also The Art of Adjusting, Write Down the Unwritten Rules of Claims Handling. Chantel, welcome to the show.
Thank you. Thank you for having me.
So this is obviously not a very sexy topic, but it is something of a, it is one of those things that it's a necessity of life. So when you think about telling people about insurance, and we talk quite a bit about life insurance, right? So we don't necessarily need to go into that, but just in terms of insurance in general, what should high-paid professionals or small business owners, what do they need to know about insurance broadly?
I would say the most broad thing to know about is some of the duties that you would have, not only to the insurance carrier, but to others that may be coming onto your property. two of the stories that I use is Rapunzel and Goldilocks, and both of these stories illustrate a trespasser coming onto the property. But the enchantresses and the three bears' duties to the prince and to Goldilocks is vastly different based on their ages, for example. And even if your listeners have an indemnity and hold harmless agreement or something like that because they have tenants, they may still have some duties to those people and their guests and clients coming in. So that can be somewhat shocking to people.
Yeah. Okay. Well, let's talk about the five main parts of insurance policies and other possible addendums, just so we get again sort of some basics here.
Yeah. So, one of my passions is to teach people how to at least become familiar with their insurance policy, maybe be a little dangerous. And the things that you need to be looking at when you look at your insurance policy is diced. DICED, or just dice because I have the nursery rhyme Three Blind Mice to explain
Okay.
the insurance policies.
Okay.
And so it stands for definitions and declarations, the declaration page. I is the insuring agreement. C is conditions. And E is endorsements and exclusions.
Okay. Do you want to tell us just sort of briefly, like each part of that, what those
Sure.
things are?
Yeah. So usually the very first page that you see on the policy is the declarations page. And the way that always explain it to my students when I'm teaching or to my adjusters when I was a claims manager is that's your who, what, when, where, and how much. That says what property is covered, how much that property is covered, where the address is, when the policy date is, all of that kind of fun stuff.
Mm-hmm.
Then you go into your definitions. A lot of times, your insurer, your carrier, is going to define things differently than what we as average people would do. And so that's when they will go in and you'll see it in bold or sometimes you'll see it in quotation marks or whatever. That's when the carrier is saying, this is what we mean when we say motor vehicle
Mm-hmm.
or residence or something to that effect.
Mm-hmm.
Then we go into insuring agreements. And this is something I always am very clear and mention several times to my students is there are several insuring agreements in any given policy. 9 times out of 10. And a lot of times, attorneys, even very sophisticated people, will only go to the very first insuring agreement. And what the insuring agreement is the promise. That is, we will cover you for claims or for losses, period. But but even these attorneys, they don't go on and read the
Uh-huh.
next part, which is the exclusions, which most people think, oh, that's all that the policy is exclusions. The next part is the endorsements, and I know I've skipped over conditions, but there's a reason. Endorsements is usually added onto the policy, and endorsements they're fun because they can either take away or give coverage. You never know. You just have to read it. And then conditions are really interesting because this is where you get into saying, if you do this, I will do that. Meaning, if you pay your premium, I will cover your claim. If there's a covered loss, then I will cover your claim. I'll pay. If you declare it within a certain amount of time, I'll pay. So it's very
Hmm.
interesting, I think.
Where do you think that you always hear about people kind of thinking they have coverage and then they don't, and they find out they don't have coverage. Where are those usually, the fine print? What section are those usually in?
You're going to see a lot of them in your exclusion area,
Hmm.
and the exclusions are difficult. And we have this thought that policies, insurance is either black or white. It's either covered or it's not covered. And there's really shades of gray. And bless their hearts, as we say in the South, I mean, these policies were written by attorneys and they're complicated. You do usually have to have like a college degree to kind of figure them out. And even then, you're not, figuring them out
Yeah.
because we have a thing called an exception to the exclusion, which is another story that I tell about the little boy with the dike, who stuck his finger in the dike. I mean, that is an exception to the exclusion. Water may not be covered, but everything after that ensuing from a water claim or pipe burst or whatever could be covered.
Hmm.
And that's when you get into some of these confusions. And what I'm hoping the book does is, again, make it a little dangerous and go, I might need to go in and ask my broker or ask my insurance producer about this.
I guess the question is there's probably certain companies for various types of policies that generally tend to be more reliable in terms of paying out. Like, so for example, I'm a physician, a number of my listeners are physicians. How should we approach, say, you're out there and you want to get medical malpractice insurance? How should we be looking at these insurance companies? Like, how should we be vetting them?
That is a great question. So there is a company. It's called AM Bests, and they rate insurance companies on a lot of different scales, and it goes way beyond my expertise. But the insurers, the carriers you're looking for, are going to be like A and B carriers. They even have, I think, A plus, A and A
Yeah.
minus, and B plus, and so those are the carriers that show time after time after time that they have plenty of money in reserve. They pay their claims. They pay their claims timely. They follow all the rules and regulations. There's no chance of going bankrupt
Yeah,
or
I mean,
anything
I
like
guess
that.
one of the questions on that is there's a difference between probably an insurance company being financially strong, right, and having reserves, and then one that tends to do what it says it's going to do rather than giving you a hard time. So is there a distinction between the two?
Yeah, and it's interesting because I do talk a little bit about the reserve section. I think that it's slightly overcomplicated
Yeah.
for just a beginning kind of insurance 101 book, but I know you have sophisticated listeners, and the deal is that insurance is regulated by the states, and a lot of
Hmm.
people don't realize that, and they think that it's national because State Farm is everywhere, Geico is everywhere, Progressive is everywhere, but it's really regulated by the states, and each state will have its own rules. So what the insurer can keep back in reserves, and just to confuse things, insurers use the same words for the same thing. So when I say they're holding back in reserve, that doesn't mean that is the amount that they are putting on your particular claim. They
Right.
have to hold a whole nother part of your premium back, uh, in case there are more claims,
Like
so that's the reserve in
like the
addition to the.
fractional banking system almost. I mean, it's
Exactly.
basically the same concept, right? Just keep a little bit
Yeah.
there. When you've got an insurance claim, what's sort of the best way to deal with that? I mean, how do you successfully deal with an adjuster?
Okay. It depends. I would say there's. I say that there's always the same steps, and it was a friend of mine who actually pointed out that most people don't know the steps of a claims investigation. And
Hmm.
in fact, I get quite passionate about this because the book that I teach in college, it says that there's only four steps in a claim settlement or
Yeah.
claims process, and one of them is payment. And I'm like, no, 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 that's not it,
Uh-huh.
because we can deny a claim, unfortunately. But the very first thing that you're going to get is that phone call, and you may be overwhelmed because this is your first time having a loss, whereas the adjuster is like, this is the 100th water claim that they've had
Yeah.
today, and so be patient with them. And they're going to send out, or you can have your contractor out. We'll just use house, for example.
Uh-huh.
They'll send out an appraiser or a contractor. You can have your contractor out there. In fact, I often encourage insureds, if they know who they want to repair or replace their property, to have that person out there and walk the property with the insurance company's contractor or appraiser, because you're going to arrive at an agreed price more quickly and an agreed scope of
Okay.
damage. And this will help speed things along, because it is very common that we go out there and look at the property, we send you a payment and the estimate, and then your contractor says, "Oh my gosh, I can't do it for this amount. That's just crazy. I need this, this, and this, and this." And then we have a supplement, and then people are feeling mistrust because all the insurance companies tried to lowball us, and these sorts of things.
Yeah.
So you get your property started to be fixed, and if there's more damage that's found, call the insurance company again, have them come out. That's a supplement. Happens all the time. 80% of the claims. And then hopefully we settle. Everything's done. If you have replacement cost on your policy on your property, and I would assume most of your listeners do, then you show proof that you have repaired the property, and the holdback depreciation amount is what would be sent to you after that, so you can finish paying the contractor.
To what degree are some of these settlements, are they back and forth? I mean, is there a haggling element to this, or is it sort of foregone conclusion from the beginning what's going to happen?
It really depends on what type of claim we're talking about. 9 times out of 10, for the first party, which would be you are working with your insurance company, there's not much going back and forth. As I said, even with automobile claims, you're going to have supplements often, and that's no big deal. When you have some haggling is maybe a total loss for your automobile. Like, you think your car is worth X amount, and everything that we are having comes back as Y amount. When you get into a lot of haggling, and this is where a lot of people don't understand this aspect of it, is the third party claimant. That is, for example, someone hit you
Mm.
in a car accident, and you are filing against that insurance company, not yours, the other party's insurance company. So you're a third party, and they say, "Okay, your claim is worth $1,000," and you're like, "How can that be? I had this, I had that, and I need at least $10,000." And that's when you really start going back and forth with negotiations.
When you think about like people who are buying insurance, I mean, what steps should they take? I mean, what questions should you be asking? Obviously, we talked about, where you might be able to find out whether there are reserves or reputations, and you mentioned a website. Maybe you can reiterate that. But what other kinds of questions should you be asking?
Sure. That website is AM Best, BEST. You can just Google that part of it,
Yeah,
and they usually run a lot of those
yeah,
formulas that you can see how, and everybody gets changed as the year goes on. I mean, it's not just static or
right.
whatever, or yearly. One of the things that you should be looking for, of course, is the rating, the A, B, whatever, of the insurer. I would also make sure that your agent that you're talking to, or your producer, is someone available. It's easy sometimes to go through the computer, say 15% or more, if you go through the computer to buy your insurance. But my fear is, and I've seen it way too often when I was a claims adjuster, is by doing that, someone is not being a backstop to you, saying, "Are you sure? Because you have XYZ exposure, and if you don't get ABC endorsement to cover that exposure, it's it's going to be bad for you. You're going to have to pay thousands out of pocket." And so I always encourage everybody to go to an agent or a producer. It doesn't have to be a captive one that only sells one type. They can be one of those jack of all trades kind of deal. Finally, I would say when you get your policy, sit down and read it. And I know that sucks. I
Yeah,
know
well,
that sounds terrible, but sit down and read it, because what you and the agent may have asked for, the underwriters may not have given.
yeah,
And that is so important. When you sit there and think, I deliberately asked for XYZ, and the insurance company said no, but they didn't tell anybody. It's actually legally your duty to read the policy. I'm not an attorney, don't listen to me, but I'm only an expert.
yeah, yeah.
It's your duty to read the policy.
Got it.
So,
What's going on with property insurance costs? Why are they skyrocketing?
oh my goodness gracious, this is a hot topic right now,
Yeah,
isn't it?
yeah,
Okay, so there are usually two ways there's lots of ways, but overgeneralizing everything, two ways for an insurance company to make money. That's your premiums, and that's their investment income. And the premiums they'll take and they'll invest it, and that we kind of already talked about that.
yeah.
Okay, so after years of having kind of a good market, that was carrying everybody, because that's really what happens, because all of these insurers, all of these carriers are marketing to you on price.
Right.
Again, be a good neighbor. I can save you when you bundle and save, and 15% or less, or whatever. I mean, we can all quote those things. Okay, all of that has finally caught up with us, because now we've gone through our surplus. The dips that we've been having as way back in 2008 have finally caught up. We've gone through our surplus, our slush fund, and now we've had hurricane after hurricane after wildfire after
I
wildfire
see.
after flood, and we are now getting into what is known as a hard market. The hard market, everybody coalesces and says, nope, no, thank you, check, please. We do not want any of this. And so insurance is really hard to come by. Capacity is down, which means, again, there aren't as many policies out there, and prices are up. We have been, for the past 20 years, in a soft market. In fact, there's a whole group of people coming into insurance that have never known a hard market. So the
I'm a
yeah,
little confused by this. So,
sure.
what's making it a hard market is the increase in losses insurance companies are having to pay out. You also mentioned something about 2008. Are you just talking about the financial markets?
Yeah. Yeah. So again, think
Because
about
right now
this.
we're at least from the S&P 500 and all that, we're at sort of record highs, right? So
Right.
uh-huh.
There is a lag.
A
I mean,
lag.
it's not
Uh-huh.
instant. It's not instantaneous.
Right, right.
And think about it this way. Um, I don't know how good of a baker you are. I am not a very good baker. And some of my cakes kind of slant.
Yeah.
And to make them level, I will put extra frosting
Yeah.
in between
No,
the
I
layers.
mean,
You, you know, so that frosting is the investment income,
yeah.
right? But the layers of cake that might be slightly off is premiums. And if we don't take in enough premium to pay our claims, our investment income, our frosting has to make up
Then
for that.
right, then
We've done,
you're digging into your savings so to
yes,
speak. Yeah.
exactly,
Mhm.
exactly. So now we have licked the spoon, the bowl, the beaters, fingers, everything we can do to get all of that frosting in, and we have no more. So now we're going to have to raise rates.
Uh-huh. And do you see that as something fluid, and or is it, are we going to see
Yeah.
are we going to see prices come back down, or is this generally a one-way street?
I don't know if prices ever go down once they go
Yeah.
up, but the answer is yes. This is my third hard market that I've seen in 25 years. And you got to remember, I've been doing it for 25 years. And I just said we've had a soft market for 20 years.
Yeah.
What the pundits have said, though, is that because we've had such a soft market for such a long time, this hard market, as we try to right the ship and correct the ship, it's going to last longer than what we have known.
Yeah.
So it will last for a little while.
Well, in terms of the other hard markets, I mean, what were the precipitating causes there? Because certainly in the last few years, we've had a lot of hurricanes and flooding in various parts of the country and that kind of thing. But that seems relatively new. I mean, like, what were the other precipitating factors that caused the other hard markets that you had?
I think it's the same thing. It's just that everybody as insurers themselves weren't ready for some larger losses like Andrew, Hurricane Andrew. That happened in like 1999, something like that,
Mhm.
if I recall correctly. So that was a huge loss. And we were in even our upswing, our soft market during Katrina, which I think was 2001 or so,
Mhm.
2005, I've already forgotten. But, yeah, we've just gone through our slush fund, and I think that's really why. They're just not taking enough premium, because honestly, since insurance is controlled by the state, a lot of commissioners don't wanna allow the insurers to raise rates. I'll give you a good story if you've got the time for it.
Sure.
I think it was farmers down in Florida wanted to raise rates about 45%, and the Department of Insurance said, "No, you can't, that's too high. You need to go back to the drawing board and crunch your numbers again." And so what they did was they added, instead of looking at 4 years of past claims, they added 5 of past expenses and these sorts of things, everything that they use to come up with it. And they went back to the Department of Insurance and said, "Did we say 45? We meant 58." So, it's just like, So a lot of times these commissioners in the states are not wanting to raise rates. So it's kind of like if you boiled that frog, if you would have turned up the water, or the heat just a little bit at a time, it probably wouldn't be as shocking.
Yeah. So
But
what happened in Florida then?
oh, Florida, bless their hearts. It's not going well. I have a friend down in Florida, and he states, and I find this really hard to believe, but I trust him. But he states that his homeowner's insurance went up 400%.
400, no.
Yeah, and
Yeah.
I just like, wow, that is just crazy. I mean, how do you afford that?
Well, I think one of the challenges too is, especially in this show, there's a lot of real estate investors, and so you tend to, you pencil in those insurance costs when you're underwriting. They're not as predictable as even something like driving up rent costs and things like that. You just when somebody throws 100% increase at you in insurance, and these are big numbers. They're not small
Right.
numbers. It creates a big problem. So I can see from the regulator standpoint that seems like to be a fairly important job. I mean, you bring up the idea that maybe they didn't increase it enough gradually, but I feel like the consumer ought not to be penalized for that because we have to be able to underwrite. We have to know what our costs are. So,
True.
hmm
And I think we as a system, as an insurance industry, we do kind of a poor job of educating our clients because there are things that we could teach our clients, the insureds, to do to maybe get those lower premiums. For example, having a fire extinguisher in your kitchen, having smoke alarms, having a burglar alarm, all of these sorts of things
yeah,
that would help lower the risk and maybe taking a higher premium.
yeah,
And that way you can have somewhat affordable insurance.
yeah. Is there anything I haven't asked you that you think is important for people to know?
I would say Be aware that the retail cost of your property is not the same as the insurance to value that is a condition and requirement of your policy. Because if you don't insure the property to value with the insurance value, you could end up paying a pro rata portion of your claim. It could be thousands of dollars. And for commercial structures, things like foundations aren't covered. So that is something to be cognizant about.
Yeah. Thanks so much for being on the show. And again, the books are Once Upon a Claim, Fairy Tales to Protect Your Assets, and The Art of Adjusting, Writing Down the Unwritten Rules of Claims Handling. And website is theartofadjusting.com.
Yes.
Thanks again.
Thank you. I appreciate it.
We'll be right back. Welcome back to the show, everyone. Hope you enjoyed it. And again, this is nuts and bolts stuff. This is stuff that you just got to know. So maybe it's not sexy. Maybe it's, dry stuff. But hopefully you learned something. Let me know if you did. Buck@wealthformula.com. Shoot me an email. Tell me about topics that you're interested in me covering, because I think that will be a useful thing too. Anyway, again, make sure you get involved. If you are an accredited investor, go to wealthformula.com and join the club. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.